Nicky Dicky here with an update for the week of the 24th of February 2023. And just a quick recapture of what's going on for this particular week. Now, again, I'm doing this on Friday before the market closes. So the numbers we're going to go over aren't finalized for the day. So we don't know if the market's going to continue to go backwards or not. But at the moment, the NASDAQ's down 3.5%, the S&P's down 3, and the Dow's down 3.2. So again, give or take 3.25 for the week. What that gives us for the year is the NASDAQ still up 8.5, the S&P's up 3, and the Dow is down 1%. So again, we're still looking at the same spread that we've been talking about all year, which is the NASDAQ's doing better than the S&P, which is doing better than the Dow, and so forth. They're retrenching very much the same way, which is solid. What we're hoping for is that when we start going forward, we're going to see the NASDAQ come back faster than the S&P and the Dow as we continue. So going back from what we saw from the week, on Tuesday, it was the big day for earnings. We had Walmart reporting, we had Home Depot reporting, we had Toll Brothers reporting, we had Medtronic reporting. Walmart had a good quarter, jumped initially, but kind of fell backwards, which is typical. I mean, it was kind of close to its 12-month high, so you would kind of expect that. Home Depot had a so-so quarter and went down rather significantly for what I considered not a horrible quarter. On Wednesday, we had Teladoc, which actually beat expectations. And we kind of talked about this. This is one of those high flyers from COVID that took another impairment charge and tanked again. Now, at one point was down almost 18%, ended up only down 6%. Because honestly, again, the impairment charge is not an actual charge. It's taking a loss on what they have, because they bought another company. So the money was already spent. They're just taking it off. It's more of a tax issue than a reality. So the numbers were actually good. So when it ended up being down maybe 6%, that's because it gave, so-so guidance going forward. So to me, it made a lot more sense when the day was done. NVIDIA reported, which was a great quarter for NVIDIA. Everything was perfect, jumped up and, starting to come back a little bit. Etsy, same thing, actually started off good, ended up dropping off. Thursday, we had Alibaba come out, jumped through the roof, which was great. We had bookings doing well. So all those things kind of went off well. So as far as this particular week, what I want to focus on is we're continuing to see the same trend where we're seeing stocks that are, if they're not doing well, and let's focus on this on two different paths. You really have your growth stocks that if they don't hit everything perfect, they're being penalized. So again, take a Teladoc, for instance, beat on revenue, beat on profit, mediocre guidance, ended up being down 6. Home Depot, kind of the same thing, beat, on pretty much everything, but guidance was okay. So we're seeing the same trend, but more importantly, what we're also seeing is that they're also not holding these things. So, you've got a Teladoc that drops again, almost 18%, ends up only being down 6. Now, still down, but not near as bad as it was. NVIDIA goes up very good because it had a great quarter. It's not holding those gains either. So it's the same pendulum that we keep talking about. So the trends are continuing, which the positive trends are that if they're doing well, they're being rewarded. And if they're not doing well, they're being punished. So keep that in mind that this is going well from that aspect. We like the trends as they're going. The other trends we wanted to look at and we continue to focus on are where are we off the bottom? So, the NASDAQ is almost back down to 30%, which I kind of think is going to be I don't want to say a magic number because there aren't really, but I do think it's going to be a bottom resistance number because if we don't hold the 30, we're probably going to retrace and go back down to the November lows, which was down 38, at least at intraday at one point on the NASDAQ. Same thing with the Dow and the S&P. You're talking, down 11 and down 17. So we're still not in, the bear market territory for the S&P because it's only down 8, not quite 18, 17 and a half. So again, I would kind of look at that as a retrenchment for the S&P. Does it stick and not hit back to the 20 and the Dow's where it's at? So we're kind of seeing what we were hoping for, which was one way or the other, you have to have those things get more closer together as far as the Dow, the S&P and the NASDAQ. So I'm liking that. But as you look at where they're off the bottom, you're still up 12, you're still up 13, you're still up 14, for the NASDAQ and the S&P and the Dow respectively. So we're still solid in that regard, having a pullback here, given all that we've had. Now, this particular week, we've had a lot of negativity as far as inflation. We just had one this morning where it was higher than what they want. Well, again, the question is, are we really focusing on the actual facts? And when we look at the facts of the case is March in reference to inflation. We may not see a great inflation numbers until we get into April, which would be the March numbers. And a lot of that is going to be because of oil. The oil numbers are really not going to be in favor of inflation until we get to the March prints, which won't come out until April. So March may end up being a rough month with a possible exception. If inflation comes down a little better than we thought. I mean, January, when we look at the numbers and we hear from these different companies, they all came out and said the same thing. January was a great month for all these businesses. Okay. Well, maybe February wasn't. And if it wasn't, we might see inflation coming down a little bit better. Because again, it did come down. It just didn't come down as much as we were hoping for. So keep that in mind when we're investing. And this is the week in review. So everything's actually continuing the way they want it to be. Granted, we'd like it to go up, but the trends that we're hoping for are continuing to hold going forward. And that's the more important part. Dickie out.